So the market pulled back a little bit this week since the inflation report rose 0.5% in January, more than expected, and up 6.4% from a year ago. So because of that, the stock market has declined a little bit. We lost some of the gains from the previous week, but overall not too terrible. And we also have Google completely failing in an AI presentation, and the stock declined tremendously for it. If you want to follow along with my buys and sells in my dividend portfolio, please hit that like button, subscribe to the channel, and let's roll the intro. So in my portfolio, the value currently sits at $21,436.48. I have two portfolios, so I have an RRSP. So this contains Starbucks and SCHD. This one's up nearly 26%. My TFSA is 20,400, and this has a lot of Canadian dividend stocks, some growth stocks, and some American stocks, and that one is slightly in the green as well. If you are new to investing, you want to get started, you can sign up for WealthSimple in the description below, and you can receive up to $3,000 when signing up and making a deposit. You also help support the channel. So in the TFSA, we're up 1% in the previous week, so our portfolio still finished in the green. Let me know in the comments below how your portfolio did over the past week. In the past month, we're still up 5%, or up 953. And then all time, we're still in the green in my TFSA by 1%, which is not bad considering 2022 is an absolute slaughter for the stock market. Nobody really did well in that year. So we have $16.60 in the cash account. So this is a combination of ENS paying us about $10.14, Smart Centers paying us around $6, and Costco pitching in with 34 cents. So we have a bit of cash to deploy. I'm just going to hold it for now. I don't really know what I'm putting it in yet. I'm going to do another small deposit end of this month, and I'll definitely be adding to some of my positions. So we can see Apple's still in the green. Warren Buffett did purchase some of this. So Berkshire Hathaway did make a small purchase in Apple in the fourth quarter of 2022. So probably buying it at a lower price than 150, but good sign that he's still buying the company despite it making up 40% of his portfolio. That shows a lot of conviction, adding to such an already monstrous holding size. Algonquin is climbing up from the $8-9 range back up to $10.50. So I guess investors are liking the risk reward here. There was a recent dividend cut of 40%, but the company is trying to make sure that it maintains its credit rating, so it doesn't pay higher interest rates on its debts, because that's going to be very important moving forward and is a big part of the growth of this particular utility company that is acquiring coal plants and then converting them to renewable power plants, turning dirty power to clean power. And ATD has climbed up from the 60 range to 65. So we're up 13% in this position. It's now basically at what I would consider its fair value. I'm hoping it drops a little bit from here. I still would like to continue adding to ATD. Otherwise, I think there are some better opportunities in the market out there. But it's still fairly valued. I don't see any issues with purchasing it right now. But again, just my opinion, do your own due diligence and, consult a financial advisor if you need to. And Aritzia, I purchased another share, so we went from 20 to 21. So with this one, it's just dropping just due to the stock market. It's not declining due to anything about the company or its fundamentals. It has a tremendous opportunity for growth in the United States. It already comprises about half of its revenue today. This Canadian company can actually grow internationally. I think once they conquer the United States, Europe, they can go anywhere. So because of all that growth potential, I'm very, very confident in this company, very bullish on it. So we added one more at the $43 range. If it drops back down to that, I'll definitely acquire some more because I think the fair value is about 50. So grabbing one for 43 I think is great. I think that's going to be a great investment long term. And with Brookfield Corporation, I purchased one more share going from 21 to 22 shares. They actually had a pretty good earnings report. So in their latest earnings report, they reported that their earnings increased by 24% year over year. So this company is just showing its incredible value investing oriented style of, just generating solid, good returns over the long term, low risk, and, high reward to the shareholder. So I really like this company. So we'll definitely be buying more, especially if it's going to stay at these levels where I'm still in the red. So very happy to keep adding here. I also purchased another share of ETHY. So we went from 61 to 62 shares. So for anyone that's not aware, I use Shakepay to, I shake my phone once a day, every day to get free Bitcoin. Once I reach $5, I actually sell it and then I withdraw that money. I take that $5, I put it into my WealthSimple account, and then I purchase 1 or 2 shares of ETHY, whatever that amount of money will allow. And that way I can get a yield. I get essentially cryptocurrency for free, and then I can generate a dividend yield from it. And, should it change the world, revolutionize everything, we won't miss out on it. But if it doesn't work out, it's less than 1% of my portfolio. So not risking, anything that I can't afford to lose on crypto. And I suggest that other people do the same. Do not concentrate on it. If you do, at least just be aware of the consequences of if it goes to zero, which it totally can. We don't know what's going to happen with crypto long term. With Google, they had that presentation and man, their AI does not look good.
In the ad, Bard is given the prompt, quote, "What new discoveries from the James Webb Space Telescope, or JWST, can I tell my 9-year-old about?" Bard responds with a number of answers, including one suggesting the JWST was used to take the very first pictures of a planet outside the Earth's solar system, or exoplanets. This is inaccurate. The first pictures of exoplanets were taken by the European Southern Observatory's Very Large Telescope in 2004, as confirmed by NASA.
That presentation where their AI made a mistake has plummeted the stock from the over 100 range to the mid 90s. And it kind of reminds me of the Tesla Cybertruck, when they were bragging about how strong the windows were, and then they actually broke it on stage, and then, Tesla stock actually went down in a similar fashion. So my take on it is simply that, AI isn't perfect yet, and, even ChatGPT makes errors too. Not all the information it presents is correct either, but it's not a good look when this is your demonstration of your product to the public. You would think that Google would spend a bit more time and fact check everything, make sure that everything is perfect, but it seems like they're in a rush to compete with Microsoft since they just released their presentation a day ago, and that went without a hitch. So the market perception is that Microsoft's AI is just so much better than Google's, which may or may not be true. Time will tell. But in terms of this, Microsoft has everything to gain, and Google has, a lot to lose because, Bing barely has any market share. If they just acquire a little bit of market share, like 10% of the market, they would triple their user base for Bing, and they would also triple their ad revenue from Bing, which is, it's definitely gotta come from somewhere. So the only possible benefit I could see for Microsoft giving a bit of competition for Google is it kind of insulates them from the government because, the government is trying to crack down on big tech and these monopolistic companies. But if Google can, say that, oh, hey, we're not alone, we're competing with Microsoft, that can be kind of a positive for the company, even though they're going to have more pressure on their earnings and margins in the years to come. So they've enjoyed no competition. Now Microsoft is kind of presenting that threat to them. So we'll see what happens. For that reason, I think Google's just a hold for me at the moment. if it drops tremendously, I will definitely add more to it. But as of right now, I think it's just a hold. I don't think it's the end of Google. I think it's just the market overreacting. They'll be fine. But there's definitely some question marks about Google, and they're not just a sure bet anymore. But I think the company is going to be fine. I don't think it's the end of Google by any means. And with H yield, we're up to 198 shares. So we purchased 2 shares with our dividends. So increasing our passive income by 28 cents a month. And, just going to keep compounding this 2 shares a month and see where it goes. For Intel, I purchased 1 more share, going from 25 to 26 shares. And I just decided to grab a bit while I was at the 27 range. I think I'll just, average down into it slowly as the price declines to lower levels in the 20 range. And, just hold it, collect the dividend, and see how this turnaround plays out. It's either going to make me a ton of money or, we're going to lose a bit of money, but we'll see how it goes. Because overall, I believe in the foundry business. I do believe that they can get back the data center and the high-end desktop market as well. So we'll see what happens there. And with smart centers, I actually purchased 3 more shares. So we were earning about $6.60 a month from this holding. I'm trying to get this holding to reach about $7 a month in dividends. So I just need to add a few more shares here and there to make that happen. Long term, of course, I'd love to have this just be able to purchase shares of itself, and without depositing any more money. That'd be awesome. But in the meantime, trying to get this up to $7 a share, especially when it's in a dip. So it's in the red by 3%, and giving about a 6.6% yield. Pretty solid monthly dividend payer. And they are building a lot of residential apartment houses near their shopping center. So I really like that direction for the company. Once a lot of their constructions are finished, that should increase their earnings and their cash flows. And we'll see if they can maybe give a dividend raise again. Again, not one of the main reasons why I'm invested in this REIT. I just want a bit of exposure to real estate, as I don't have any real estate outside the stock market. So this is how I get my real estate exposure and generate a monthly income from that. For TELUS, we went from 46 to 48 shares, just averaging down on this position again. They also had some earnings that weren't fantastic, so they kind of missed their estimates a little bit. However, they are expected to really decrease their capital expenditures in the year and improve their operating income by a fair margin. So TELUS is looking strong, and I am trying to double my share count of TELUS by the end of 2023. And I just decided to break down that goal by purchasing just 4 shares of TELUS each and every month. And I'm just going to continue doing that throughout the year so I can purchase shares of itself. And then with TD Bank, I purchased about 0.4 shares of this. So we went from 20.5 shares to 20.9. So I just really, and I rolled this bank into giving me $20 dividends each and every quarter, which is a nice little milestone to hit. So, the first step is I'm trying to get my stocks to hit $10 dividends, then $20 dividends, and then 30 and 40 and so on and so forth. And then with these little goals, eventually our dividend income will be enough to have an impact on my life and maybe be enough to cover all my expenses someday, but I have to continue depositing and being consistent with my portfolio. And with Tesla, it continues performing very well. It's rolled back into the green. It's in the green by 10.6%. I'm not currently adding at these levels, but I'm very excited with the company. And they're even rumored to be wanting to purchase a lithium miner. So that's pretty interesting. We'll see what happens there. I know that they're going to be opening new production plants. So very exciting company, and I'm just happy to, hold on to the stock and be along for the ride. It's definitely very interesting, entertaining stock in terms of the volatility. So I definitely know it's not for everybody because, people say they have a high risk tolerance until their stock moves up and down 50%. So if you've watched up until this point, please like and subscribe to the channel. Thank you so much for watching. And for my dividend progress, we've earned $11.7697 in dividend income since starting the portfolio. in February of 2021. So it's the 2-year mark. We've earned about $1,176. So not too bad. That's money I didn't have before. Annual dividends are projected to be $983.76, which is an increase from the previous update of $968. A nice little increase there in the annual dividends. This is getting close to my $1,000 in dividends annually. So just got to make a couple more deposits, reinvest those dividends, and it will roll into that. And then we'll make a new goal for ourselves. So we're constantly striving to improve our income daily, weekly, monthly, annually, and it's just going to keep growing at unprecedented paces. So for the monthly average, we went from 80.68 to 81.98. So, an over $1 gain, which is nice to see. We're inching closer and closer to our $100 a month in dividend average. Weekly, we're up about 30 cents. So 18.62 is now 18.92. On the daily, we're earning an extra 5 cents a day in dividend income, which is great. So 265 to 270. We're just 30 cents a day away on average to hit $3 a day in dividends. And then I'm going to have a new goal. So very excited to cross that. And months to earn $100 is how I'm tracking the compounding effect of the portfolio. So when it started, it took me about 6.5 months to earn my first $100. And now we've got it down to 1.22 months. So that is a tremendous decline in the amount of time it takes me to earn $100, which is great. So I'm just going to keep an eye on that to measure my progress over time. And then my hourly wage, if my portfolio was to work a 40-hour work week for me, it still produces 47 cents per hour for a 40-hour work week. So let me know in the comments below, how your dividends are going. Thank you for watching. Don't forget to like, subscribe to the channel, and have a great day.